Hello there, Maverick Traders. This is Rob Reinhold. It is so good to be here. And look at that, September is almost over. We're moving into October, so let's go ahead and get started. In this session, we're going to go over the news of the week. We're going to break down what the broad markets did. It was a quiet week this week. We're going to score all of the sectors from +3 to -3, and that's going to tell us where to go hunt for the week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, so this was a quiet week when we take a look at everything. We did hit some new all-time highs. So the Dow and S&P hit new all-time highs last week. They were slightly up for the week, so that means that new all-time highs, but it wasn't all that dramatic. Not dramatic at all. The Qs were up a little bit. The Russell was down a little bit. Look, it was a very quiet week. As far as the news outside of the stock market, we did get some rising tensions in the Middle East. So Israel has now moved into striking into Lebanon. There is some news reports out saying that there might be a ground invasion. That's definitely making things a little hotter. Look, these things are in the periphery and the markets are watching them. And at some point, the market will decide that it matters. Right here, right now, the markets have decided whatever's happening does not matter. But there is always a tipping point when we have these global concerns where all of a sudden the market does care about it. So if you're looking this saying, why isn't the market caring about this? I can't really tell you why. And I've learned really not to ask why over the years. I remember as a young trader, I would actually yell at my screen, why is this happening? I never got a response, so I stopped yelling it and realized I will never know why. And then when I became okay with that, I realized, oh, I don't know why. All I need to know is that's what's actually happening. At some point, this might tip. Right now, the market doesn't care about it whatsoever. And if you've been watching gold, gold has been having a phenomenal year, up 44.5% to date, hit new all-time highs this week as well. So let's take a look at the calendar, because last week I said that economic growth is now becoming very, very important. It used to be inflation. We've now moved away from inflation being a worry to now the worry is growth. We didn't have a ton on the calendar here except for durable goods orders. That was probably the biggest one, and you can see the durable goods orders was fantastic. A great report. So this is what the market wants to see. They want to see things with economic growth do pretty well. We had a couple of manufacturing numbers that were not so good, but look, manufacturing has been bad for like two and a half years now. The market has completely ignored it. But, this durable goods number is a good one. And then we did have the core PCE price index, the inflation number, that was even weaker than expected. So look, this is exactly what the market wants. They want to see continued economic growth, and inflation is basically done with. So what did that mean for the market? Well, look, this was a very, very quiet week. It was the week after quad witching options expiration. So the Dow Jones was up, 0.5%, S&P up 0.5%, the Qs up a little bit more, the Russell down a little bit. Oil turned around pretty big. It had had 2 or 3 weeks of a rally, turned out pretty good. And as we talked about, gold hitting that all-time high this week just continues to look really strong. If we take a look at the charts, if you remember last week, or if you didn't hear last week, I basically said, hey, look, it's a breakout. If you don't believe it, if you don't like it, if you don't think it should be, I don't care what your opinion is. You just have to accept that it broke out. And you can see here, look at these 5 candles we got for the week. These are uninspiring candles, but we did go higher. I think this is what we are in store for a lot over the next couple weeks going into the election. It's probably going to be a lot of this kind of price action. You can see on the last 3 days, gap ups and sell off. It's not really super inspiring, but in the end, the market went up. So this is where I don't want people to get fooled, because if you already had a bearish bias, so let's say that you don't believe this market is going to run any higher, and then you see candles like the last 3 days, you're like, see, I know I'm right. Every time the market opens up, it sells off. I know there's sellers. And then it creeps up for the day and ends up closing positive. And if you were shorting, you took a loss. These kind of candles give your bias a false set of hope when you really just have to look at everything. We're above the 20, we're above the 50. Everything is looking to the upside. You just have to get on the bullish side. Here's the NASDAQ. NASDAQ broke out. Again, those last two candles, they're very uninspiring candles. Very uninspiring, but we broke out. You cannot ignore the fact that we broke out of these levels. Now, look, it wasn't a breakout and run. I get it. But it's telling you you need to be on the long side. If you haven't gotten there yet, please get yourself there. Now, look, the markets could reverse it any day. I have no idea what's going to happen in the future. But I do know that when I follow the technicals and I put my opinion on the back burner and just follow the technicals, my trading is phenomenally better. When I use my opinion and try to figure out what the market should be doing, that's when I get myself in trouble. Taking a look at the heat map, pretty broad across the board, and you can see not a ton of participation in the large cap techs. So the large cap tech did not participate much. We do have a trade on Meta that is working out nicely. The chips had a nice week. Micron had a good earnings report that helped them out. You can see everything else pretty much just a generally basic, very small up week. Let's talk about this week. I did not change anything on this page except for the year-to-date returns. So I've got a bullish market. If you don't like it, I don't care. Keep your opinion to yourself or grumble about it to your friend, grumble about it to your spouse. Anyone who wants to listen to you, grumble about it. I don't want to hear it. I just want you to be on the right side of market movements. Again, that is our only bias, is to be on the right side of market movement. I'm going to say this again. I said this last week. I think the velocity is probably going to slow down quite a bit here. We're going into this election. People are probably saying, I'm not going to put a ton of money ahead of the election, but no one's selling ahead of the election either. So we probably get this slow growth higher. And again, we are focused on economic growth. Last week, we only had the durable goods orders. This week is going to be much more important for economic growth. Starting off on the 1st, we've got ISM manufacturing. I think this one you can also ignore a bit. Manufacturing has been weak. This number has been below 50 for about the last 2 years, and the market hasn't really cared about it. So I think this one, if it comes out, let's say it comes out weak, let's say it comes out at 47 or 46.7 or something like that, the market's going to ignore it. If this thing comes out at 49 or comes out at like 50, the market is going to cheer and celebrate, and that will spark a rally. Whenever I see a situation like this where I think there is asymmetric risk versus reward, I always really like that situation. So if this number is weaker than expected, the market shrugs it off. If this number is better than expected, the market jumps 1%. I really like how this is setting up here. On Thursday, we probably have the second most important one, which is this ISM services PMI. This number is a larger part of the U.S. economy, and it's supposed to come out at 51.6. Last month, it was 51.5. This has come down from about 54 earlier in the year. If this number is weaker than expected, I think it is going to hurt the stock market. I think the stock market will have a sell-off if this number comes out weaker than expected. But I think the sell-off is 0.5%, 1%. If this number is stronger than expected, another 1% rally, maybe 1.5%. I still see this asymmetric risk. And on Friday, it is the first Friday of the month, so that means the payrolls report, looking for 144,000 jobs. Look at those numbers. Anything lower than 100,000 jobs probably freaks the market out. Anything higher than that, I think the market is really going to like. Remember, we just got that PCE index, that inflation index, at 0.1. Nobody's worried about inflation. So now economic growth with low inflation, that is Goldilocks for a stock market. When we take a look at the charts, this is a +2. I said this last week. If someone looked at these moving average and said, Rob, that 50 moving average is sloping higher, I will agree with you. It's just not sloping higher very quickly. If someone said, I think it's a +3, I would not fight you. I would say, great. You be +3, I'll be at +2. Who cares? Who cares? If the market goes up, we're both going to do just fine. I got a +1 for the week because I think the velocity is just not there. Now, granted, I think this week has a better chance than last week to have some larger moves because we have just more data coming out. So I think that payrolls report, that ISM services report on Thursday and Friday could easily cause a rally or a sell-off. I think the first 3 days are going to be pretty quiet like this week, but then I think it picks up on Thursday and Friday. Let's go in and take a look at our sectors and see what changed this week.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Last week, our strongest sectors at a +3 were the utilities sector, which went higher. We also had the industrials sector that went higher. We also had consumer that went higher, and we also had materials that went higher. So those were our +3 sectors. And you can see that consumer materials were the 2 top sectors. Industrials was pretty good. Utilities lagged a bit. Remember, stay with the winning sectors. This is how we want to align ourselves. If you remember last week, we downgraded real estate and healthcare. And I said I expect these to continue to be downgraded. And you can see they underperformed this week. Energy was our worst sector at a 0, and you can see it was a negative. If I was to point out the one aberration here, financials. Financials was at a +2. And if you wanted to point to anything last week that did not perform how its relative strength was showing, it was financials. So financials did get a little bit of a downgrade this week, but it's still at a +1. So let's go in and score them all from +3 to -3, starting with the utilities. Nothing has changed for a very long time. It's a +3. Look, utilities is a lower volatility sector. It's had a huge monster run. It's still a +3. It's a +3 with not a ton of velocity. You can still be very bullish in this sector. It's holding up very nicely. High basing here. Looks beautiful. Comm services. Comm services, one of the things I was looking at was, okay, could we break out of this little high base here? And you can see we did break out of it. We did break out of it on Thursday and Friday. We closed at those highs. I'm upgrading this one from a +2 to a +3. Coming to real estate, we were at a +2 last week. I said I expect this to come back down probably into a 0, and you can see we got a downgrade to a +1 here. I still think these next 2 sectors are likely going lower. We had healthcare at a +1 the week before. We moved down to a 0, and you can see it's probably going to go a little bit lower here, just to like a -1 next week. But at this point, it's a 0. It's just sitting between the 2 moving averages. Let's go to where the strength is. Last week, industrials was a +3. +3. It wasn't a pretty week. Take a look at it. These 5 candles. We had 2 up moves on Monday, Tuesday, and then every day it gapped up and sold off, gapped up and sold off, gapped up and sold off. It doesn't inspire a lot of confidence, but when you look at the week, it was a good week for industrials, and they only got stronger. They were already a +3, only got stronger. Now, this is the one that I think if you take a look at anything that was an aberration, it was this one. Here we have the 5 days in, just think of where we were. We are knocking on the door of breaking out and running, just like we were with industrials, just like we were with comm services. And it didn't. It's looking okay still, but we're going to downgrade this one to a +1. Here we have consumer. Looks strong at the first of the week, looks strong at the end of the week. The candles on this one looks even better than the industrials. We have technology moving from a +1 to a +2. We still have to wait for these moving averages to steepen up. And look, this is a pretty uninspiring breakout. Definitely not a breakout and run, but a breakout and fall back down in. But it did get an upgrade. It did get a little bit stronger than it had been. So we moved that one to a +2. It was +3 last week. Materials stay at a +3 this week. And look at those candles. That was a great week. An absolutely great week for materials. Gap up and run. Yes, we had one gap up and sell off, but look at that. Continued to charge higher. Looking great in materials. And then energy. We had a little bit of a sell-off in oil, so that brought this down. I'm still going to just move this one to a -1. -1, so slightly bearish. This is where we sat last week. Let's do the downgrades first. We got downgrades of 1 by energy, healthcare, and real estate. And then we got upgrades from technology and comm services. This is where we are. We have clear outperformance in consumer comm services, materials, industrials, utilities, underperformance in energy, healthcare, and real estate. But healthcare and real estate, I don't think you can get really bearish. The only sector I think even makes sense to get bearish, and I don't like bearish trades at the moment here, is energy. I think that's the only place that makes sense. Let's take a look at our trading slots. We had 3 trades roll off. We had trades roll off in industrials, financials, and the consumer sector. So take a look at where we are sitting at the week. We are sitting with 8 trades on. Sorry, only 6 trades on. We have 6 trades on, and you can see we're leaning slightly bullish. Last week I said I'm very happy just being here slightly bullish because I can always add more if the market shows me that it's ready to add more. I think this week the market did show that in spite of gap ups and fall downs, that we're still ready to move higher here. Sorry, I did not update this chart, but we already looked at the S&P chart, and I gave it a score as a +2. So here are the slots available. We can have trades in these slots. I'm going to add 4 trades this week. That's going to be pretty much all bullish. And this is what I said last week. I've got plenty of time. If we are breaking out and running in through the election, I've got plenty of time to become more bullish, and that's what I'm going to do this week. I'm going to add a +2 in industrials, consumer, and tech. And I'm going to be adding a +1 in financials. I am not going to be adding anything to real estate. Remember, whenever we talk about real estate and utilities, most of the stocks only have monthly options available. I don't want to go so far out. I don't want to go 4 weeks out on this trade, so I guess it'd be 3 weeks. I will be making a real estate trade next week to fill that slot. But for this week, I've got industrials, financials, consumer, and tech, and they are all bullish in nature. So let's take a look at some of those possible setups in these sectors. Remember, I'm just picking one of the stocks out of the sector. That doesn't mean it's the best one. Go in and do your own analysis. Go see what stock you like best in the sector. I'm picking them for the style of trading that I prefer. It may not match exactly what you prefer. You might be able to find a stock that looks much better on a chart for your style of trading. First up is the industrial sector. We had a nice trade in 3M roll off for max gain, so let's go ahead and replace it. right? This is Raytheon or RTX now. They've changed the name, but I still call it Raytheon. It's like I still call Facebook Facebook. They changed names a little bit. All right, so you can see here, if we take a look holistically at this thing has been trading between 118 and 123 for about a month and a couple weeks. There is no sign here that this is going to break out and run anytime soon. So I want everyone to understand this trade. So when I look at this, I say, hey, I've clearly identified a very strong stock in a strong sector. Right here, right now, it is not moving to the upside. It's not. There are strategies for this kind of trade. A lot of people, they say, I'm going to wait till it breaks out, and then they wait to 124. And look, they've already identified the trade, but 124 is not as good of an entry point, if it is going to run, than 120. So we just have to be thoughtful on how we enter things and take a look at our slots and take a look at our time frames. Looking at this one here, if I wanted to do something shorter term, then it's a +1 trade. So a +1 trade is a bidirectional trade, meaning that if it goes sideways or higher, I'm going to make money. This chart is perfectly fine for any trade like that. So like a 119, 121 bull call spread. So any vertical spread that's over 50 delta is going to have positive theta in it. Any diagonal call spread is going to have positive theta in it. Any like broken wing butterfly or slightly out of the money targeted butterfly, these are all going to have theta positive in it, which means that if it goes sideways, it's perfectly fine. If you're going to trade these, like I love to trade these because I'm sitting here saying, I think this is going to go higher. I have no idea when it goes higher, but I want to put in a trade that if it goes sideways or higher, I make money. Then it is a +1 trade. Again, diagonal call spreads, bull call spreads. There's another way I like to play these is saying, you know what? I like it. And basically I'm going to give myself 2 weeks, 3 weeks, 4 weeks for it to break out and run. And that's what I'm going to be doing on this one. I'm going to say, look, I don't know where the timing is, but I think it's going to happen in the next 2 weeks. You can go out and go to the 119, 123, and you can see this is still not a super aggressive trade. 123, 119, 123, we're basically saying, okay, I think it's going to go up to there. You're not even really calling this for a breakout and run. If you wanted to get more bullish on this, you absolutely could go to a +3, but on that one, you just want to have more time. You'd want to go out to like at least the October 18th, if not maybe the 25th. Then you give yourself a little bit more time because right now, it's not saying it's going anywhere now. You're saying, I'm going to open up a trade with enough time frame that I think during that time frame, it's going to break out and run and make me some money. Right, next up, financials. Financials, I'm looking for a +1 trade. So I'm not looking for anything crazy. I'm looking for a stock that's going to at least hold where it is now or move higher. This is American Express. And you can see here, we've got a high base, bull pullback, whatever it is. It is hanging out here from 265 up to 270. 265 to 270. This trade is just going to be, hey, you know what? I don't know if it goes higher, but I think it holds here. So I think I like this one here. If you're looking just to be a +1, and I think you can just do this for the week. This stock has to go up, this $270 stock has to go up $1.50 and hold that for this trade to be profitable. If you want to be a little bit more directional, then you can see you can open that up, and each time I'm giving it a little bit more time. But for me, I'm looking at that +1 trade, just out a week. Remember, I've already predetermined that I'm going to be +1 in financials. So I want to go try to find the stock that fits +1. If I do a +1 trade, I don't get paid if the stock takes off for 20%. I should have done something better because I'm going to make a very small amount of money on the +1 trades. You're going to want to find a stock chart that fits your outlook. Moving on to consumer. Consumer, I'm at a +2. I want to have something that is going to move. So here we have Sweetgreen. This is a new restaurant company, and you can see that we've got some resistance. We've got some resistance. We are hanging out right in this upper band here. We had an earnings report that the street loved, and you can see we traded all the way down to that gap point. We're back up. I'm looking at this saying, I have no idea when this thing breaks out. It could be this week. It could be next week. You know what? This is where you can go out, say, give me 3 weeks. I'm going to do the 35-38 bull call spread. And now you're saying, you know what? I've got 35-38. I want this thing to break out and run. If a breakout of prior resistance and runs, this is going to be a really nice trade with the +2, giving us a nice risk to reward on it. If someone said, Rob, I'm going +3, great. I think this is absolutely the kind of stock that you can take a look at. The market's really good right now at a +2, or maybe you're at a +3. The sector's at a +3. This is where you do want to open it up to some more bullish trades. If someone said want to go to +3, I'd have no problem with that whatsoever. All right, and we are adding tech. Now, we already have a sideways in tech, but tech is one of those sectors that has been getting stronger. So I want to start allocating some bullish capital into this sector. So really, kind of the same trade I was talking about. Finding a stock that had a really good earnings report and then traded up substantially after that, and now has just kind of topped out here. So you get to decide what to do. You have, I want to just make money if it holds this level, or I want to play this more bullish, or I want to play this wildly bullish. It's all just right here. You could do it with vertical spreads. Again, the sideways stuff you could do with targeted butterflies. You could do with diagonal call spreads. The really bullish stuff you could just do with straight calls. Remember, give yourself more time if you're asking your trade to go further for you. That just makes sense here. So for me, I'm looking at a +2. I've already predetermined. So the +2 is going to be the 76.80 bull call spread. And you can see I'm not asking for a ton of movement. I just need it to happen within my 2-week time frame. So if this thing breaks out in the 2-week time frame, it's going to be a really nice trade in the tech sector. So we're adding in some bullishness to the tech sector. As it's been 2 weeks, it's been upgraded. Let's wrap this up. Markets are bullish. I didn't change this from last week, and I really want to keep driving this point home. I know you may not feel it. I've been saying that for I think I've been talking about this for the last month or two. I get it. There's a lot of reasons. We have a presidential election coming up, and based on how you lean, that election may be looking scary to you. It might be looking hopeful to you. Look, I don't care your political leaning. It does not matter at all as far as a stock trader goes. But it does affect how you feel. And right now, if you know that, hey, my neighbors just got laid off and I haven't heard of layoffs for a while, that's all part of how you feel. And look, it's perfectly fine to validate your feelings. It's perfectly fine for you to feel the way you do. But we trade charts at Maverick. Period. Trade the chart in front of you. It's pretty dang clear. It is pretty dang clear, and it has been pretty dang clear for a while what side you should be on. We have a saying at Maverick, plug your nose and buy. Look, I get it. It stinks. Sometimes you just got to plug your nose and buy. And then follow the sectors. If you're really worried about it, look, just be in the good sectors. Make a trade in the utility sector. What a chicken trade, a +3 utility trade. And then start to add in some more in the +3 trades. I think you're going to be really happy with your results. And then all of a sudden that helps you separate your feelings and your bias from your trading. That is your goal, to be a trader first. Then you can be a community member, a Republican, Democrat, Independent, whatever it is you want to be second. But when you put money on the line, it's only because that's what the charts are saying. All right, my rant is over. Everyone have a great, great weekend. Stay safe out there, and let's go make some money next week. Goodbye, everybody. you.